if you look at it right now, I mean, private equity is always viewed as, by some, as sort of levered listed equity, and that's how it should behave in terms of valuation. It's a lot more nuanced than that. Private equity tends to use transaction multiples, which are longer term in nature, as well as baskets of listed comparables. And so it is correlated with listed equities to an extent, but not as much as you would think. Now, there's obviously an element of art rather than science in terms of the valuations. So it wouldn't surprise me if there's certain areas or certain managers that perhaps have been a little bit tricky in terms of how they're doing it. Certainly in terms of the growth and venture space, I would say there's a lot of our managers are revaluing on a bottom-up basis now, and actually using the revenue, the gross profit, the earnings of these businesses to value and produce a genuine value. There will be some managers, I'm sure, that will be using a last funding round price, for example, which was in 2021, which is very much out of date and before interest rates really rose as dramatically as they have. So it wouldn't surprise me if something comes out in the wash, but by and large, we're not really seeing that. We're seeing proper valuations taking place.
Alan, I want to ask you about the sort of activity we're seeing out there in PE world. I mean, you point out in your research that new investments in these vintage years, this is usually a great time with lower entry points here. But if you look at deal activity from your world in the third quarter, we've seen very low level of transactions with the lowest level since the second quarter of 2020. So the macroeconomic environment clearly catching up with private equity. What changes? What's going to drag PE off the sidelines in terms of some of the buyouts and exits?
Yeah, it's a fantastic question. I mean, our thesis is that it will continue into the first half of next year. There's probably two things at play. One, well, we're coming off a fantastic year. 2021 was a record year, over $1 trillion of value traded in private equity, an all-time record. But there's two things at play. Firstly, I think the expectations of buyers and sellers are just too far apart right now. I think that sellers or potential sellers of quality assets right now are looking at pricing from 2021, and the environment has completely changed since then. So potential buyers are looking at this and saying, well, if I have to finance this deal, my costs are higher, the discount rate's higher. You know, it's very, very hard to forecast growth for individual companies in this environment. There's so many external variables with the macro environment the way it is. So I'd say that's the first thing. There's sort of a bit of a disconnect between buyers and sellers. The second thing is definitely around financing these deals, which I alluded to a little bit earlier. You know, a lot of large banks right now are closed to new leverage buyouts. They're working through their existing book. They're trying to figure out pricing and the risk going forward. And right now, there really is only the private credit funds available, and it's their moment to shine, really. It's their moment to make returns.
Alan,
they have to pick up the deals. So yeah, that's why things are probably a little bit slower, and we expect it to be slower over the next 6 months.
I think you're being